The stock market is a fascinating place. Many men have tried to decode its workings, tried predicting its unpredictable moods, gained a lot, and lost a lot too. This fickleness adds to the charm of the stock market, where millions of investors flock to daily, aspiring to make a fortune. Let's see some lesser known did you knows about the stock market that would surely rouse you to explore this interesting investing avenue. Often naive investors tend to ask the time investment would take to double itself. It can be calculated based on the rule of 72. The rule is a simple way of determining how much time will an investment take to double given a fixed annual rate of interest. By dividing 72 by the rate of return, an investor may get an estimate on how many years it will take for the initial investment to double itself. Let us see an example. Assume you are investing $100,000 at 8% return. Then, as per rule of 72, it would take 9 years for the amount to double. That is 72 divided by 8, which is the annual rate of interest, which is equal to 9. Though, the rule of 72 is not entirely accurate. A businessman named Premchand Roychand founded the Bombay Stock Exchange, BSE, in the 19th century. Mr. Roychand made a fortune in the stockbroking business and later became famous as the Cotton King, the Bullion King, and the Big Bull. BSE was initially known as the Native Share and Stockbrokers Association. BSE is the oldest exchange in Asia and has over 5,000 companies listed. This makes the exchange of being the only bourse with the highest number of listed companies in the world. In addition to BSE, there are over 23 more exchanges in the country. Before 1995, there was only physical trade that was executed in the exchange. After 1995, the exchange started with the process of dematerialization. Berkshire Hathaway is the world's costliest stock. One share of the company costs you over $290,000. Yeah, you saw that right. Berkshire Hathaway, Inc. is an American multinational that is headquartered in Nebraska, USA. The company is the third largest public company in the world and the largest financial services company by revenue in the world. Ace inventor Warren Buffett, who serves as the chairman and is supported by another investor, Charlie Munger, who is the vice chairman which manages the company. On February 1st, 2019, the company's share is sold for $313,000, making it one of the costliest shares in the world. This is because the company has never had a stock split and has not paid dividends except for once. The bull and bear market is the most commonly used term in the stock market. When the stock price is appreciating and the overall mood of the market is positive, it is known as the bull market. It is also believed that the bull has its horns pointed towards the sky, which symbolizes upward movement. Thus, the bull market is related to the climbing market. On the other hand, the market where the overall sentiment of the market is negative and the stock price has been declining, it is known as the bear market. It is often believed that the bear, when tackling the bull, has its palm towards the ground, and thus bear market resembles a declining market. The Dutch East India Company was the first multinational corporation in existence. Created in 1602, it is the first company to issue stocks and is the granddaddy of all corporations today. Since 1950, the Dow has declined 1.1% and the S&P 500 has declined 0.7% on average during the month of September. Since the Nasdaq was created in 1971, its composite index has fallen an average of 1% in September, making it the poorest month of the year. Most people would think of the dot-com bubble of 2001 as the earliest stock market bubble, and maybe some people would even think of the Great Recession of 2009. I believe the earliest people would think of it the Great Depression of 1929, but in fact, the earliest recorded stock market bubble was in 1720. It is known as the South Sea Bubble. In 1720, the South Sea Company took over some of the government debt. Aside to that, they ran a promotion campaign to inflate their share price. It led to rapid inflation of the share price. This fact is so cool. What does the hydrogen bomb have to do with the stock market? Not a lot, but you can find things about it by looking at stock market valuations. In the 50s, the USA was researching the hydrogen bomb, or the thermonuclear bomb. Physicists were forbidden to reveal which fuel was used for it, but a lot of people were curious about it. A professor of economics, Armin, managed to find out that lithium was used as the fuel. He saw that during the tests, the stock price of Lithium Corp rose significantly. This company saw a return of 461% during the main year of the experiment. Armin tried to publish his findings, but it was forbidden by the government for national security. Only much later was he able to publish it. Out of all these stock market facts, this is the one that surprised me the most. If you were already surprised by the age of the stock market, you might be even more surprised by the age of the first investing book. The earliest book about invest that we know of is Confusion of Confusions by Joseph de la Vega. It is a Spanish book about speculation and investing. The book is most famous for its 4 rules of speculation. Never advise anyone to buy or sell shares, or never listen to advice for share picking. Accept both your profits and your regrets. When you speculate, you're going to lose some money and you need to be prepared. Profit in the stock market is goblin treasure. Sometimes profit is very high, sometimes it is very low. He who wishes to become rich must have money and patience. Incredibly, a book that's more than 300 years is still very much applicable to the stock market of today. The world stock market is huge, with 60 stock market exchanges, but the USA stock market is the biggest by far. As of 2018, the US stock market represents 40% of the entire world stock market. It is much more than the second country, Japan, that makes 7.59% of the world stock market. It is really impressive that a single country makes so much of the stock market.